Joining me to break it all down is Anthony Saccaro. He is the founder and president of Providence Financial. Anthony, it's great to have you in studio.
Thank you for having me.
Absolutely. Now, you know, the PCE report is the Fed's preferred inflation gauge, right? So what do you anticipate that we are going to see from this report that's released on Friday?
Yeah, so they're expecting that it's going to come down a little bit, that there's going to be a little bit of a drop. We know that inflation has ticked up recently over time, which is not good for the Feds, and it's put the Feds in a position to where they don't really know what to do. They want to lower interest rates. That generally would be good for the economy. It's what they want to do. But the reality is that they can't if inflation keeps ticking up. So we're really hoping that the PCE report shows a little bit of cooling off in inflation. That's what they're expecting, and we'll see where that leads us.
What do you think are the key factors that could impact the Fed's decision for a rate cut?
Well, I think there's inflation and tariffs. Those are the two things that we just don't know exactly what's going to wind up happening. And unfortunately, President Trump's not going to come out and tell us whether or not he is using tariffs as more of a political tool or whether or not it's something that's actually going to kick down and ultimately be felt in the inflationary matters by the consumers. He's just not going to tell us that. You know, we had Trump 1.0, right? And the tariffs didn't give us any problem. There wasn't a major inflation surge at that point, so we kind of know what's going to happen. And if it's only 10% tariffs, like if that actually gets passed down, then companies can actually consume, absorb that. It's not going to be a big deal. But if it's more than that, then it's going to get passed on to the consumer and could increase inflation, and that's what the Fed has to watch out for.
I was going to say, where do you see it going for the rest of 2025 or even into 2026? There's a lot of factors at play here, right? The geopolitical situations that is unfolding overseas, right? And then we also have everything that we are watching here at home. How do you see the trajectory playing out for the rest of the year?
So I see with inflation, it being sticky.
Yeah.
Okay, and a lot of the reason inflation is sticky is because of wage inflation. You know, over the last couple of years, I've had to give my employees lots of wages just to keep them, because of the fact that the labor market is so strong at this point. As long as the labor market stays strong, and as long as there are more workers than jobs, more jobs than workers available, then the reality is it's going to stay sticky. The Federal Reserve has been predicted to lower rates 2 times this year, but 4 times this year rather. But I think they've lowered it recently to 2. And last year, if you remember, they were going to lower it 6 or 7 times, and that wound up not materializing. They only wound up lowering it 3 times for 100 basis points. So I think inflation is going to be sticky. I think the Federal Reserve is going to have a battle on its hands to try to lower interest rates. I wouldn't be surprised if they didn't lower interest rates at all, just because they have to have a reason to lower rates. And with inflation ticking up, with unemployment staying low, the labor market staying strong, if they don't have a reason to lower it, they're not going to be able to lower it.
Let's switch gears to consumer spending. How are rising prices affecting that consumer spending aspect of it? You know, I mean, this is a key role in having a strong economy. So what's your take? So
interestingly enough, consumers have not quit spending.
Yeah.
Consumer sentiment was down a little bit, but the reality is that the inflation is, in the high 2s, depending on the measure that you look at, and wage growth was, I think, in the low 4s. So we're outpacing, the growth of wages has outpaced inflation, so consumers still have money. But consumer debt is on the rise, so people are starting to go back to borrowing. But as long as the consumer keeps spending, the economy will stay strong. GDP clocked in at 2.8% last year, just a little bit below what it was in 2023. And it's all because 70% of GDP is based on the consumer. And as long as the consumers are working, as long as they've got money to spend, then the reality is they're going to keep spending it. GDP is going to stay strong. And there's really no reason to think that we have any type of recession or any problems in the near future.
But, consumer confidence has been choppy, to say the least. What does that say about how Americans feel overall about our economy?
Yeah, so in the last year, consumer confidence has shot up.
Yeah.
Okay, but over the last month or two, a couple of readings, the consumer confidence has come down. It's still in very positive territory. So the reality is that consumer confidence, although it came down, is still very positive. There's nothing that seems to indicate that we're going to have any type of recession around the corner. That was something that's been talked about for years, almost like that recession that never came. And I think it's time to say, look, it's probably not going to come, at least not as a result of some of the things that have happened in the past. So.
And NVIDIA's earnings are in a full focus this week, as you can imagine. What does that reveal about the tech sector and investor sentiment?
Yeah, interesting. It's almost like where NVIDIA goes is where the entire tech sector is going almost. That's what people are looking at. It's almost the new Apple. And so when the earnings come out tomorrow night, the reality is they're going to be really looking at that. And it's not it's not good enough that they beat the market. It's been rinse and repeat with Nvidia's earnings, where they come out, they beat what they said, and that's what investors want. But they're overpriced now. DeepSeek came out, and now they have competition. And if they do what they did before, it might not be enough to keep the investors at bay. It's going to have to be really good to make sure that investors are happy and that it doesn't sell off.
Just briefly, do you still think that there's room for growth there?
I do. I think that there is plenty of room for growth there, but I think for the first time they've got some competition. But we don't even really know what DeepSeek is yet. We don't even know where, is it real? Is it not? So there's a lot of that we don't know, but Nvidia is the player in the game. I think there's a lot of room for growth, especially after the pullback it's recently had too. So.
Well, thank you so much for joining me. Again, Anthony Saccaro, founder and president at Providence Financial.